Today I want to talk about Alibaba. We'll go over a brief history of what's gone on with the stock over the last few years, as well as discuss some very big buys from super investor David Tepper. And finally, I want to discuss the tariffs that have been announced and the effects they could have on China. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Alibaba is a stock that has been beaten down over the course of the last 5 years, trading down almost 43% from where it was trading in 2019. And from its all-time highs of over $300, the stock has fallen over 70%. However, in the past month alone, we have seen some very strong momentum behind this stock, as it has risen over 25%. Alibaba collapsing over the course of the last 5 years has come from a number of different reasons. The first one really occurred back in November of 2020, when Chinese regulators began cracking down on tech companies throughout China, as they felt like they had too much power and were too large for their own good. This really kicked off with the Chinese government blocking the IPO of Ant Group. Alibaba owns a large portion of Ant Group, so this had a big effect on Alibaba's stock price. We've also seen the Chinese government roll out a number of multi-billion-dollar fines against both Alibaba and Ant Group. More recently, we saw a $1 billion fine against Ant Group in 2023. A lot of investors believe that this is the last crackdown from the Chinese government on big tech. On top of all of this, the US government started demanding that Chinese companies allow US auditors to actually look at their books, and this brought up concerns of Alibaba potentially being delisted from the New York Stock Exchange. This concern eventually subsided as the Chinese government allowed auditors into the country to look at the books. However, more concerns continue to pop up throughout China, as large manufacturers that once looked at the country as an area to produce low-cost goods have now looked to move their operations elsewhere, some of the two most notably being Apple and Samsung. A lot of these are macroeconomic conditions that Alibaba really doesn't have direct control over. However, Alibaba's underlying business has suffered due to some of these conditions. Their revenue is only growing around 7% currently, and they also have seen their net income collapse in a major way by 96% down to $127 million. There are some very big positives around Alibaba as well. They're starting to grow their AI revenue in a significant way, up triple digits, as well as they are repurchasing a large amount of their shares. In the fourth quarter, they repurchased $4.8 billion worth of shares. With the weakness that we have seen throughout China, a lot of super investors have shifted their focus to buying some of these discounted stocks. And one of those super investors is none other than David Tepper, who is building out positions in a number of Chinese companies, including Alibaba. If you aren't familiar with David Tepper, he is the founder of a hedge fund called Appaloosa Management and has a net worth of $20.6 billion. He is most commonly well known as the owner of the Carolina Panthers, but has generated very good returns over the years through his hedge fund. In 2001, he generated 61% returns by trading bonds, and then in 2009, he was trading financial companies, buying into companies like Bank of America when they were trading extremely low after the Great Recession. And now David Tepper sees a lot of potential in Chinese companies, specifically Alibaba, where he over doubled his position in the last 3 months of the year, growing it to a $6.7 billion position in his portfolio. He also bought Chinese companies like PDD Holdings, Baidu, and JD, as well as trimmed some very interesting positions in the Magnificent Seven, including those of Amazon, Microsoft, Meta, and Nvidia. In total, Chinese companies now make up almost a quarter of the hedge fund's portfolio. Here we could see a full breakdown of the portfolio that David Tepper manages, and Alibaba is now the #1 holding in that portfolio, making up 12%, with an average cost estimated at about $78 a share. We can see the trims that he made to his Amazon, Microsoft, Meta, Nvidia, and even Google shares, as well as the ads here in PDD, as well as Baidu, and if we scroll down a little bit further, we also see the big ad in JD. And one of the big reasons that David Tepper has added all of these Chinese companies is due to the differences in PE ratios that we have seen between US-based and Chinese-based companies. This graph shows that over the past 10 years, there has always been a significant difference in what investors are willing to pay for Chinese-based companies versus US-based companies. However, more recently, at the start of 2024, we saw this difference drop to an all-time low. And this big difference has a lot to do with the relationship between the US and China. And it doesn't seem to be getting any better with Biden announcing new tariffs against China. And overall, these tariffs are looking to help increase the number of jobs throughout the US in manufacturing. This is a common strategy. When you increase tariffs, you increase the cost of producing goods overseas, and thus you cause companies to reconsider where they are producing their goods. And they will most likely, if that cost gets too high, start increasing their production in US-based facilities. There's a few different ways to look at this when it comes to Alibaba. Alibaba primarily sells goods throughout China, so overall this shouldn't have a huge effect on them directly. However, there could be indirect negative effects, i.e. if we see manufacturing shut down in areas of China for goods that were sold to the US, this could thus cause some people throughout China to lose their jobs and not have money to pay for goods that Alibaba sells. And ultimately, this could have a negative effect across the Chinese economy. However, one thing that China has shown over the course of the last 6 months to a year is that they're looking to help improve their economy. They're doing this by cracking down less and less on big tech companies throughout the country and trying to grow their middle class. China has a very large discrepancy between their upper class and lower class incomes, and what they need to do is focus on growing their middle class and building out that section of the population. And part of the way they can do that is by improving companies like Alibaba and improving manufacturing for goods that they sell throughout their own country. So ultimately, I think China is going through a period where they have to focus more internally on how they generate growth. And this is something that they haven't necessarily had to do over the last couple of decades. They've gotten a lot of growth from external factors, but now they need to shift to internal growth and trying to build up the middle class. And I think that Alibaba is going to be a big part of that, as they are one of the largest companies in the country. So I would love to see Alibaba continue to grow and gain success and work more closely with the government to kind of help build up the country and get it back on track overall. And I believe that David Tepper sees this as well. He sees the Chinese government as well as the Chinese economy in general going through a period of change and sees this as an opportunity to get into these Chinese companies for very, very cheap valuations. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Do not buy a company just because some super investor bought into it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. I hope you enjoyed the video. If you did, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, why don't football players wear glasses? Check the comments down below for the answer. Thanks for watching.